Welcome to the FedLife podcast with Dan Sipe from Serving Those Who Serve. In this podcast, Dan draws from years of financial experience to help federal employees overcome challenges that every Fed can relate to. Join us for this journey as we reach, teach, and serve to help you make the right financial decisions. Now, on to the show.
Hello and welcome to this episode of the FedLife podcast. I am your host, Dan Sipe.
That is correct, Dan. And just to go over this again in terms of FERS employees and what they will receive in retirement, there are three retirement components to the FERS for FERS employees when they retire. When a FERS employee retires from federal service, they will receive a FERS Annuity, TSP, and they're eligible for Social Security.
Okay.
We talk about when can a FERS employee retire. A FERS employee is eligible to retire before age 62. For example, they could retire at their minimum retirement age, which is between age 55 and 57, depending on what year they were born, with at least 30 years of service.
Gotcha.
They could retire immediately. I'll just mention again what immediate means. It means your immediate retirement. It means you retire and you're going to get the first of lifetime FERS monthly annuity checks. The first check will be 1 to 2 months after you retire. That's why it's called immediate. You don't have to wait to get that check. So that's the FERS annuity. The second component, TSP. You put money into the traditional TSP account. And if you retire from federal service sometime during or after the year that you turn 55, you can start making penalty-free withdrawals from your TSP account.
Gotcha.
If you have the raw TSP, you'll have to wait till 59 and a half. The third component is Social Security.
Yep.
The earliest age one can retire, one can start receiving his or her Social Security retirement benefits is age 62.
Very true.
Now, one other possibility, by the way, when a FERS employee can retire. A FERS employee could retire at age 60 with at least 20 years of service. Let's say they have between 20 and 29 years of service. They could retire with no penalty, no reduction in their annuity at age 60. Now, let's think about this. A FERS employee could retire before age 62. Start receiving an immediate FERS annuity, start receiving their Social Security, their TSP, We're talking about traditional TSP because they're over 55. We talked about MRAs between 55 and 57. So they're going to be at least age 55. So they could start receiving their TSP if they wanted to. No reduction, no penalty. But wait a minute. What about Social Security? What did we say at the earliest age one could get Social Security? 62. If they retire before 62, no Social Security.
Gotcha.
So what OPM has done is that they implemented from the start, when FERS started, that when a FERS employee retires before age 62 under a regular, normal retirement, immediate, and that includes, by the way, early retirement. If someone goes out under an early out, they're eligible to receive the FERS, what's called retiree annuity supplement, which is in addition to what they will get when they start getting Social Security. Okay, this is strictly before age 62.
Gotcha.
This annuity supplement, Dan, will start the month after the employee has retired, but will stop. It stops when the employee reaches age 62. It's automatic.
Gotcha.
And at that point, the employee or the retiree now has to make a decision. Do I want to start my Social Security? I'm 62. You can, but I will tell you, if you start your Social Security at 62, your Social Security is going to be permanently reduced. Maybe you don't want to do that. So what else can you do? Can you draw your TSP? You haven't drawn your TSP at that point? Absolutely.
Sure.
Can you go out and get another job? Absolutely. Now I get the question, if I work after I retire from FERS, under FERS, I'm getting my FERS annuity, will OPM take away any of my FERS annuity? Absolutely not. You can earn as much as you want, and your FERS annuity is going to be there. No offset, no reduction, nothing. We're going to talk about in a few moments, Dan. That is not the case with the annuity supplement.
Oh, yeah.
We're going to talk about the so-called earnings test. But I just want to say up front that you can earn as much as you want in a job. Take a high-paying job, become an entrepreneur, you're a sole proprietor, you have a tremendous net income from your business, go for it. No effect on your FERS annuity supplement.
Gotcha.
I'm sorry, on your FERS annuity.
Gotcha. Okay, so we're a FERS Fed. We've put in our time, and we're retiring at our MRA that is before 62. How do we calculate what we're going to get from the annuity supplement? Your article shows 4 steps.
Okay, so let's go to the 4 steps here. All right. So step 1. Okay. And I got to tell you, the employee does not, the retirement employee does not calculate this.
Understood.
It's actually OPM. They're the ones who calculate this. What happens is that OPM is going to contact the Social Security Administration. And here's what OPM is going to say to the Social Security Administration, the OPM retirement office. We have an employee who's under FERS, who has retired at their MRA and is eligible for the annuity supplement. And what we need to know is, right now, we need to know what that individual's, that employee's calculated Social Security benefit is as if he's 62 at that point. As you know, Dan, if you have a Social Security account on their website, and you want to know what your benefits are in today's dollars, they will tell you based on what you've paid it, all these years you've been paying to Social Security, what your benefit will be at 62, at your full retirement age, at age 70.
Yep.
Okay. As of that time. So OPM wants to know at that point. And Social Security will give them that information. Okay. Okay.
Yep.
That's step number 1. Step number 2, OPM is going to look at the total years of service that this employee had under FERS. It's called creditable service. By the way, that's full-time and it's part-time. If you have part-time service, those years will count for purposes of calculating the FERS Annuity supplement.
Okay.
What about bought back time? If you made a deposit for temporary time, will that count?
I would think it should.
It does.
Yep.
Another question, Dan. What about if you bought back your military time? Would that service time count?
I would also think it should.
It doesn't.
Ooh.
Ouch.
Ouch
That
indeed.
hurts. Please do not ask me, Dan, what the rationale is between that. I don't understand the difference between buying back temporary time and buying back military service.
Sure.
But that's what they do. Okay. Once again, it's temporary time that you made a full deposit. Okay. All right. So we have the total number of years of FERS credible service.
Mm-hmm.
And then we divide that by the number 40. So let's say somebody had 30 years of FERS service, credible FERS service. Divide 30 by 40. That's 75%.
Yep.
And then we multiply this percentage, in this example, 75%, to what that employee's anticipated Social Security benefit is at 62. So let's say that at age 62, the employee, retired employees, Social Security benefit at age 62 is $12,000 a year.
Mm-hmm.
Multiply 75% times 12,000, you come up with 9,000. That is the amount of the now FERS retiree annuitant will be getting $9,000 a year in addition to their own FERS annuity.
Gotcha.
The $9,000 a year will continue until the month the retiree annuitant reaches 62, and at that point it stops with no cost of living adjustments.
Yep. I was about to ask. You're in the COLA trap there.
And that's also, there's no COLA on the FERS annuity because you have to wait till 62.
Yep. Gotcha. So, all right, let's take it a step further. So awesome. We're a Fed, we're a FERS Fed, we've retired, we're collecting our annuity supplement as long as our pension. And lo and behold, our old buddy from our agency who retired a few years ago reached out to us and offers a job with his federal contractor. And it sounds good to us. So we have even more money coming in. We got it made now, right? Or is there a catch with the supplement?
There's a catch.
Okay. What's the catch?
And here's what it comes down to, Dan. The FERS annuity supplement, not the FERS annuity, the FERS annuity supplement is subject to what is called an earnings test.
Gotcha.
An earnings test. What is this earnings test? It is the same earnings test that Social Security recipients who are between age 62 and their full retirement age are subject to.
Okay.
What is this test? Let's take the year 2022. If you're between age 62 and age 66 years and 4 months, because for this year, anybody who's reached 66 years and 4 months this year has reached their full retirement age.
Mm-hmm.
Okay. All right. And let's say you're working, you have a job, you're getting a salary, and you're receiving Social Security.
Gotcha.
Social Security will tell you, well, we'll give you your Social Security, but if you earn too much money, we're going to take away your Social. We're going to take away some, if not all, of your Social Security. In particular, this year, if you're working and you're over 62 and receiving Social Security, for every $2 you earn over $19,560,
mm-hmm.
Social Security will take back. I mean, they're going to take it back. $1 of your benefits. It doesn't take much to earn $19,560.
Sure. No, it's true.
I mean, it's almost like hourly wage. Hourly. I mean, you're not. This is not exactly a career. You're working.
No.
For. It may be a very part-time job, whatever it is. It doesn't take much.
Sure.
So that's why I advise people who are between 62 and their full retirement age. If you're working, don't take Social Security. You're going to end up giving it back.
Sure.
Now, this whole business of the Social Security earnings test is the subject of another podcast.
No,
but
gotcha.
The only point I want to make now, Dan, is the fact that exact same earnings test, same rule that applies to Social Security this year applies to the FERS Annuity supplement. In other words, Dan, any FERS retiree who's younger than 62 receiving the FERS Annuity supplement this year, mm-hmm. and who is working, for every they have a job or they're self-employed, for every $2 they earn, mm-hmm. or they net in self-employment, mm-hmm. above $19,560, OPM will take back $1 of their annuity supplement.
And that's forever, right?
No, it's a year by year thing.
No, but what I'm saying is what they've taken away, there's no way for the Fed to get that back.
Absolutely. You won't get it back. Nope. You're not going to. Whereas with Social Security, good point, Dan. With Social Security, when they take back your Social Security benefit, you will get that back later on when you draw, mm-hmm. your Social Security. When you reach your full retirement age, you can go out and earn as much as you want. There's no earnings test. You'll get a full benefit. So with the FERS Annuity supplement, you're right, Dan. It's lost forever.
Yeah. Ouch. So when would the reduction hit somebody? So they just retired, they got their job, they're humming along. Where are they going to see that reduction?
Okay, the way OPM does this reduction is that they do not apply it in the current year. Mm-hmm. They're going to apply it in the next year. Okay. So the person this year, let's say they retired last December 31st, 2021, and they're getting an annuity supplement this year. Okay. And they're working. This year's annuity supplement, the current 2022 annuity supplement, is not going to be affected. It's going to be next year's, the 2020 annuity supplement. In other words, let's say this person earned, I'm taking a round figure here. Let's say they earned $41,560. $41,560. Mm-hmm. So they're about $22,000 over the limit. Divide 22,000 by 2. That means that the person's 2023 annuity supplement will be reduced by a total of $11,000. OPM will reduce the amount of their annuity supplement by a total of $11,000. If their annuity supplement is the example we're using is the person's annuity supplement is $9,000.
Sure.
A year. That means in the year 2023, do the math here, 9,000 minus 11,000 leaves them what? Nothing.
Yep.
They're going to lose. They will not get any annuity supplement in 2023.
Oh, ouch. Okay. And so there's also a reporting requirement here too, correct?
Yes. OPM requires FERS and new supplement recipients to every year file a report. And that report, they report their earnings in the previous year. So let me give you the form. The form number is Form RI, which stands for Retirement and Insurance, mm-hmm. 92-22. The form is entitled Annuity Supplement Earnings Report. When would this be reported? Well, in the example here, in the example I just used, the person is earning this has a job, getting the $9,000 a year supplement. Next spring, in May, after the person has gotten his or her W-2, they have to download the RI 92-92 next mm-hmm. spring and send it off to OPM. So OPM will then apply any reduction in their 2022 annuity supplement.
Gotcha. Folks, if you're following on our previous podcast, you notice that I inaugurated the retirement folder rule. This is another one. Okay. Copy it, store it digitally, print it out, put it in that file. Because when the time comes to make decisions, you don't want to rely on your memory. And Ed has given you a great primer on this, so you know how everything works, because you do not want to be surprised by this once you're retired. And it will happen. It does happen. Okay. We see it regularly in the work that we do. So this is another one. Put into that folder. You will be happy that you did.
Good suggestion, Dan. I read that's a good idea.
Yep.
Am I just saying a couple more things about this annuity supplement?
Sure.
And some of the questions I've received. This happened about 5 years ago. I was doing a retirement seminar, and it was a FERS retirement seminar. And a gentleman comes up to me after the seminar. He says, "Well, I'm going to retire this year at age 60. I'm going to get the annuity supplement. I already have a job lined up. And I said, "You're aware of the earnings test? I went through the earnings tests." He said, I don't think I have to worry about it." I said, "Why? You're not earning. You're not going to be earning that much." "No, I'm going to be earning about $50,000. $50,000? That definitely could put you over the point that they're going to have to. You're going to lose." He said, "No." A friend of mine hired me, and he has a good company, and the company has a 401k plan. And he said, "I can immediately put money into the 401k plan. They match for every dollar I put in, they give me $4. Sounds like a great deal. And because I'm putting my salary, almost all my salary, because I think I can put in, I'm over 50, I put in at those days, you could put in, I think it was like 22, I think it was $23,000 when you include the catch up, Dan." Mm-hmm. He said, "I'm going to put all $23,000 into 401k, and that will reduce my salary from $50,000 down to $27,000. I know I'll lose some of the supplement, but not all of it. This way, I can avoid the full force of the earnings test." I said, "Sir, that's not going to work." He said, "What are you talking about? I thought when you contribute to a traditional 401k plan, like traditional TSP, that the money's going before all taxes." I said, "Not all taxes. It's only federal and state. You still have to pay Social Security tax." He said, "What that got to do with it?" I said, "When you report your earnings on Form RI 92-22 to OPM, what they're going to be asking you for is what showed up on your W-2 in the box that says Social Security wages, not taxable wages. It is your Social Security wages they're looking at. If you put $22,000 into that 401k, yes, your taxable salary will be $50,000 less $22,000 or $28,000, but your Social Security wages will stay at $50,000. Oh, I didn't know that. I said, glad I'm giving you this news right now.
Yep. Better to find it out before.
So that was one thing I want to mention. The other thing I want to mention is, and I get this question a lot, Ed, I want to know the pros and cons of retiring before age 62. I could go out before 62. Is it really worth working until 62? Because I was told if I retire at age 62, I'm not going to get that annuity supplement. Mm-hmm. Remember I said that the annuity supplement stops when you're 62. If you retire at 62 or older, you're not going to get it. And what I tried to explain is that you're getting your FERS annuity. You're going to get if you retire before 62, you're going to get the annuity supplement. Will you have enough income between those two in order to avoid having to go back to work? And the person says, "I think so." Well, you don't want to find out the hard way. If you don't, then you have to go back to work, and then you're going to lose your supplement. But Here is the most important point. That when that person retired before age 62, the way the FERS annuity is calculated is for every year of service you have, you get 1%. Your accrual factor is 1% of your high 3 average salary.
Yep.
If someone retires at age 62 with a minimum 20 years of service,
Yep.
the accrual factor is 1.1%.
Absolutely.
You are getting a 10% bonus. Dan, for how long is that 10% bonus?
That is for life, Ed.
It's forever.
Yep.
How long is the FERS annuity supplement for?
The FERS annuity supplement
Stops
is
when?
only until you hit age 62. Yep.
You know what I don't like? I don't like Monday morning quarterbacks. What do I mean by that? I don't like when somebody says to me at age 64, I could have, I should have, but I didn't retire at 62 because I had over 20 years of service and now I'm paying for it. Okay. 10% is a big bonus.
Sure.
Okay. So I hope everyone who might be considering retiring before age 62
work the numbers.
Is run the numbers. And in terms of the 1% versus 1.1%, I wrote a column, as you know, in the Fed Zone talking about that.
Absolutely.
So please, those of you who have not, want to know more about the 1.1%, I think the article came out and was either sometime in May or this past June. All you got to do is just put in the search engine annuity calculation, FERS annuity calculation. I think it'll pop up.
Yep. Absolutely. You go to our site, you go to the search bar, and that will come up for Ed. And
just go ahead.
Yeah, no, you're spot on, Ed, because I joke about the fact that in my career, I've kept more people in federal service till 62 than retention bonuses because people, it just gets lost. It gets lost in the noise sometimes. And, I'm talking to somebody, I've had people saying to me that they're going to retire at 61. 61.
Oh, God.
And it's like, why are you picking that? Help me to understand. And I said, do you know that there's a 10% bump at 62? No, I didn't know that.
Oh.
So I hate to say that it's a best kept secret because it's not meant to be. It's out there, but unless you're really digging in and reading, you're not going to know it. That's why Serving Those Who Serve exists. Okay. So yes, we have financial advisory practice. That's great. Somebody wants to work with us on that level. They want that personal relationship. We're here for that. But also we want it to be a place where you go to that website and you type in a topic, you're going to get straight info and you're going to get the answer you need so that you don't make these types of mistakes. So go ahead, Ed. I'm sorry I cut you off.
Thank you. I appreciate the information. Just like you said, how many people you've convinced to work to 62. I have during the years I did all my seminars as opposed to webinars. I was seeing people live, and they'd be gung ho. They'd be gung ho about retiring early. There was an early out, or retiring before 62. And then when I went through all the disadvantages of going out before 62, and they came up to me after the seminar and saying, "Thank you very much. You really convinced me not to retire before 62."
Sure.
I said, I did my job. I did my job.
Yep. Absolutely. And that's what makes Ed the man. So Ed, thank you for all that you do for the federal community, and especially what you do for us Serving Those Who Serve, helping our team get better. And folks, that is a wrap. We are Serving Those Who Serve. Be sure to subscribe to this podcast on our YouTube channel and Spotify. Remember to share it with your friends and strangers. Check us out on Twitter and LinkedIn. Don't forget our live webinars every week. Just go to the SWS website. You will see that webinar button. Hit that, and you can select from the entire menu. The guru will come to you. But wait, there's even one more way to learn from Ed. Remember, that's the weekly serving. Go back to the description on our YouTube channel there, and you will see the link. Go ahead, and then you will get the best of Ed and the rest of our Fed stars at Serving Those Who Serve coming right to your inbox every single week. So, and as far as those webinars, sign up for one, sign up for all. And be sure to read Ed every single week in the Fed Zone. That's fed-zone.com. So for Ed, the crew at Serving Those Who Serve, and me, Dan Sipe, good luck, Godspeed, and above all, remember, it's your Fed life. Make it a great one because you deserve it. Stay well, everyone. We are out.
Thank you for listening to the FedLife podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Serving Those Who Serve or Raymond James. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Securities offered through Raymond James Financial Services Incorporated, member FINRA SIPC. Investment advisory services offered through Raymond James Financial Services Advisors Incorporated. Serving Those Who Serve is not a registered broker-dealer and is independent of Raymond James Financial Services.
Raymond James is not affiliated and does not endorse the opinions or services of any of the quoted professionals or their respective firms. Any opinions are those of Dan Sipe and not necessarily those of RJFS or Raymond James. This case study is for illustrative purposes only. Individual cases will vary. Raymond James is not affiliated with and does not endorse the opinions or services of the quoted professionals or their respective organizations.
Neither Raymond James Financial Services nor any Raymond James financial advisor renders advice on tax issues. These matters should be discussed with the appropriate professional. Investing involves risk, and you may incur a profit or loss regardless of strategy selected, including diversification and asset allocation.